Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading, and today, Tuesday, day 2 in our week, talking about price action, best trade setups, and first red day. First red day on all the indexes yesterday. We had Martin Luther King Day. We talked about this briefly yesterday, that there would be some large moves today. And whenever we have a U.S. market that is not trading, and we have a 3-day weekend, sometimes a 4-day weekend, we can potentially have large moves. We had first red day, first green day on other instruments also. But today I chose the U.S. markets because we had the obvious pattern potentially in place, and then the process for filtering down the indexes to the one that I felt was the best trade setup for me, that I resonated best with. And so walking through that process, coming back to the simple steps, and again, just going back to basics. Yesterday tells us a lot about where our opportunities may lie today. And then it's whether or not that actual setup comes to fruition and completes the pattern for entry. First red day, we look for the pump day. First, we need to have a pump up. We need to have the pump up because we want the market to be taken further away and trading further away, and getting traders to continue to trade further and further away before dropping away and having a market that potentially may go into a large move day free fall. We had Martin Luther King Day on Monday, and that gave us a first red day. Remember, first red day is a day that closes below the open after the pump day. So I'll hammer home the simple process because traders are still sending screenshots with a down day and then looking for the setup the next day, but it's remember, a 3-day setup. So we have our first red day, and then coming back to the simple concept, as the week starts, we have our opening range. That sets the initial high-low for the week. We had a market that broke out in Asia on the Monday, put a high in place, failed breakout, and then put a low in place. And that is my opening range for the week. I only trade the U.S. market session for the U.S. indexes. My belief around that is there obviously can be days where there'll be great movement, possibly in Asia or London. But I'm looking for that U.S. market opportunity because I trade the U.S. session. And as I talk about in the playbook, everything comes back to some basic concepts. Everything is pump and dump or dump and pump. When it all boils down to either a buy setup or a sell setup, as I talked about the other day, everything else is you can put as many names on things and have all these definitions and ideas and concepts. But the question I always pose to traders is, how easy is it for you to reproduce your results? How easy is it for you to reproduce your process? And is it scalable? Or does it sound really good, but is it complicated? What's the real reality in live time that you can duplicate the process day in and day out? Come to the screen at a specific time and know whether or not you have a setup, number one. What type of setup is it? Is it a scalp, or is it a sizable opportunity, a 3-day setup? Or is it just a session opportunity for 25, 50 pips, whatever that may be? Or do we have a legitimate scalable opportunity? And when that comes to fruition, it will either be a pump and dump or a dump and pump. Every setup, even the trend trade is the reversal coming out of a large dump, beginning the pump on a 3-day setup, or coming out of a pump into the dump for the parabolic setup in the trending trade in the opposite direction. So when we have a first red day, first green day opportunity, and I'm looking for my New York session opportunity, first red day is a high of the session, high of the day opportunity for, if it's first red day, pump and dump, which means when the market opens, I'm looking for it to be pumped up. Now we look for break in structure, would give us an indication of a broken down market. With a pump and dump, can be a first red day high of session, high of day opportunity, or a low-hanging fruit continuation trend trade because the market has already moved in the previous session. So trying to narrow this down, all the pairs are very similar. So coming back to some simple things, we got first red day. We have a box. We have a high-low box that Monday has given us. When we take a look at the NASDAQ, we have the same pattern. We have the pump up on Friday. That's our pump day. We have our first red day on Monday, Martin Luther King Day. The continuing high that failed on Monday, that forms our high-low box in our opening range, Monday opening range. That's our new high-low for the week. We've broken higher. And so that high of the week potentially may be an area for the pump and dump failure when the market opens. So the market opens and takes traders higher into the high of the week before reversing back inside. Now, interestingly enough, the Dow Jones, the DJ30, broke down first. So we have our first red day again on Monday, close below the open, first red day, holiday, and the beginning of our new week. This is a textbook setup on all the indexes for this pump and dump scenario. So we have our high-low range, our new box for the beginning of the week. I'll just move this down. And that establishes the opening range. So again, all three indexes very similar, except that the Dow broke down prior to the New York Open and the U.S. session. Now, you've heard me talk about a broken down market. A broken down market is where a market has broken structure, and if we're going down and it breaks down on the inside, our break in structure on the inside, after first red day, we are looking up high for the pump and dump. If the break in structure is down low on the inside, we're looking for the dump and pump, which one trader executed perfectly today on the pound yen in the London session. We had the higher high, the break in structure, then the dump and pump after first green day. So this was my ideal candidate because, again, coming back to the simple concept of spacing, if this market was to pump up and fail, we had a large range potentially down, not necessarily all the way down, but a minimum at least into the breakout candle, the breakout engulfment candle from Friday night. Now, I don't know about you, but very rarely does a market ever just come back and stop somebody out. They will put pain. And on a smaller time frame, obviously we had breakout traders down 5 minute, 1 minute, down in the lower area of that range. So to me, this was the ideal candidate because break in structure, a weaker market. Now coming back and looking S&P, we can just project the volatility from CPI across, and that becomes the high for me. I look at that as a high of the range. So we talk about three things that markets do. They break out, pull back, and trend. They break out, pull back, and fail. Failed breakout typically can establish potentially day one of our new 3-day count. We have an inside bar. So we have not only first red day, but we have the inside bar. Remember what happens when they trigger breakouts on an inside bar. Inside bar trade opportunity that we talk about in the playbook, gain the inside day, false breaks and trend trades. Now, if we have an inside day after the holiday, which we've talked about, I'll just keep repeating that because I know once you get a holiday on the calendar, especially the U.S. markets, this is going to pay you big dividends. So simple concept, the market puts a high day in the Asian session and puts a low of day in the London session. There's a first bounce for traders who wanted to scalp into the open of the session, into the breakout of the high of the week, and triggering the breakout traders, gain NASDAQ as well. But now we're forced, if we take that trade, to be selling a market that's breaking out, even though it gave a great setup on the 1 minute and the 5 minute, back into the low of the day, as opposed to taking a market that's broken down and pumping up and can collapse now, potentially all the way down. When we look at Friday's breakout on the 1 minute, we have I'll just zoom in on this for traders to see. I'll typically just go and look at the level of where the engulfment candle has taken off and started that run up on our Friday chart. So we zoom back across and we can see roughly around that 50 level, dotted line, again major round numbers, potentially could be an area where this market could push down into, but in this particular case today the market just collapsed straight down to the bottom. And again, coming back to the timing. The best part about trading the indexes is that 9:30 we can already have a well-established confirmation of our thesis. We had major red news, prelim U of M report at 8:30, not that necessarily going to be a big mover, might have been, don't know. But the best part is that we have a market that has broken through the low and made a lower low, breaking structure on the inside. In a broken down market, we look for the pump and dump. So 9:30 New York opens up high and pins through the highs, immediately engulfs after the open for a first entry position after the market has done its micro M pump up. The market is pumped up 100 pips from the low of the day. We've extended the low. That's our break in structure after our first red day. First red day trade setup on day 3 is a pump and dump trade setup. The best part about this opportunity is we have markets that pumped up at the open, engulfed, collapsed. 5-minute and 1-minute entries, go to your playbook. The entries were pretty much identical for first entry. Broke through, made lower lows, new hour opens. New hour opens and pumps up. 1 push, 2 push, break in structure, 3 pushes, engulfment in the second 15-minute candle of the third hour for another position inside of our entry criteria on the 5-minute or the 1 minute for the collapse down through the low of the day. Now, something else I want you to just identify with here is the box. So a simple method to target profit targets. One trader asked if I could do a video on Fibonacci's. These are not Fibonacci's. This is a 100% expansion of the range. This is just, Peter Brandt taught me this. High-low range expansions. Schabacker, Edwards and McGee. This material is 100 years old almost. It's not new. Nobody just thought of it. But have the confidence to know once they break out to perform that range expansion that this trade now is potentially going to move and continue moving until it hits the target. We've broken out on day 3 after our pump up. Remember, 3 things markets do. They break out, they pull back, and they trend. Break out, pull back, trend. So this was a huge opportunity, and the first hour of the New York market gave a perfect trade straight down, gave a second opportunity to get back into the same trade. The Dow broke down. It breaks down. It breaks down. This is simple. There's nothing complicated or complex. It's a setup. If it breaks down and it's a first red day trade, we look for the pump and dump. That's it. First red day, they broke out. The same setup, but we're at the high of the week. It's the same setup. They break out and pump it up, lock in the high. 3 pushes for the collapse back down, but we have the potential now to fail where the move began at the neckline. In the Dow's case, this is the NASDAQ, same setup on the S&P. The Dow had room to collapse all the way down. Once it broke through, pumped up, it had nothing to stop it from moving all the way back down. So again, sometimes you get those opportunities. This was a tremendous opportunity today, and congratulations to the other traders that nailed that. Some traders had excellent trades on some of the currencies in the London session today. We had opportunities on oil. This was a fantastic textbook perfect opportunity for a first red day trade on the DJ30 U.S. market equity session, and the difference in how to narrow the three down to one that gave the best trade opportunity on the day. First red day trade setup, an excellent opportunity. Keep it going, traders. Have a great day. And keep it going, traders, and keep it growing. And may the markets go with you.